Good morning and welcome to the Longboat Energy PLC post-AGM investor presentation. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Nick Ingrassia, CEO. Good morning.
Thank you very much, Paul, and good morning to everybody. Thank you for joining us for our post-AGM Investor Meet Company presentation. I'm pleased to report that all resolutions were passed at the AGM today, which marks the end of an incredibly busy few weeks for the company as we've worked to transform it into a Southeast Asian-focused E&P. Hopefully everyone can see the presentation on the screen. As I've mentioned, the past 6 weeks have been incredibly busy. During this period, I've been appointed CEO. James today was elected Executive Chairman, and we've worked to slim down the board to a more fit-for-purpose 4-person board. We'll go through some of those people in another slide or so. What we've been doing really during this period is focusing on our cost-cutting, to ensure that the business itself is fit for purpose and that we are set up for success in Southeast Asia. As part of this overall process, we also took a very detailed look at the business in Norway and made the decision to exit there. In a press release this morning, we put out that we are making very good progress with that exit. We now have approval from the Ministry of Energy there, as well as having lender approval as well for that transaction, and we would expect that transaction to close some point during the summer, bringing in $2.5 million of cash into the business, which itself will see us alongside of our cost reductions, see us get through at least the first quarter next year with adequate cash resources. Alongside the decision to exit Norway, we've decided to pivot the business to Southeast Asia. We will go through a few slides on that and really the rationale behind it. But this really comes, against a macro backdrop of very positive growing economies there, which are very energy hungry. There's a proliferation of opportunities in the region for small and medium-sized businesses, really led by host governments, which are very encouraging for businesses like us. We see a structurally lower cost of operating there, largely due to the benign environment. And we also see a big ESG win with carbon emissions able to be reduced through replacing coal-fired generation with gas-fired through indigenous resources. We also have a wonderfully experienced team with a track record of both portfolio building and successful exits. And in the near term, we're going to be focused on farming out our Block 2A, which we'll get onto. I'm sure everyone wants to hear from James. And we're also looking forward to securing a gas cluster offshore Sarawak. And through this whole piece, we'll remain opportunistic when it comes to the ability to pick up additional assets in the region. Just a quick overview of the management and board as it's been reconstituted. I am Nick Ingrassia. I'm the CEO. I was previously the business development director at Longboat, but also previously at Salamander, Faro, and Valiant. For those who have a long history in the UK E&P space, all of those businesses were sold to peers. I have a background in finance largely, both on the lending side and on the investment banking side. But I also have some operational experience post-takeover of Faro. I ran DNO's UK operations, which included some operated Southern North Sea assets. I'll let James introduce himself.
Thank you. Yes, James Menzies. I was the founder and CEO of Salamander Energy, which was a pure Southeast Asian-focused E&P company, which we started back in 2005 and sold in 2015. Since then, I've been helping small E&Ps in Southeast Asia, notably Coro Energy for a little while, also Tap Oil is an Australian ASX listed. And then myself and my business partner, Pierre Ellier, who's now our man in Southeast Asia, based in KL, set up a business, Topaz, advising people around business development in Southeast Asia, and Longboat became one of our clients. And since October last year, both Pierre and myself joined Longboat full time, and vended in our interest in Block 2A, which we're going to talk about shortly.
We're also super grateful that Graham Stewart is remaining on the board. He has a huge amount of experience in the space, and continues to have a huge contribution to the business. And we're also pleased to welcome Geraldine Murphy onto the board today. She has a long history in the independent E&P space on the banking side, and so will be invaluable in helping us transact going forward. So we'll run through a few of the sort of macro sides before I'll hand over to James to give an overview of 2A and some of the activities we've got going on over in Southeast Asia. So I guess the backdrop for the entire pivot really is based around Southeast Asia being a great energy growth story. You've got a very young population who still consumes on a per capita basis a very low amount of energy versus more developed peers in Europe and North America. And this really leads to hydrocarbon demand forecasts growing over the next 20 or 30 years, as opposed to North America and Europe, where it's projected to start declining. It's worth noting that these energy needs are currently being met predominantly by coal and coal-fired power generation, which really is a travesty given the amount of natural gas resources you have out in Asia. And I think that we can be very positive in that sense, helping some of these countries develop through monetizing those gas resources and replacing the coal-fired generation. So we've got a great macro backdrop to being in Southeast Asia and trying to build a business there. For a small business such as ours, one of the other things we look for is where are the opportunities and where's the competition. I guess in terms of the opportunities first, what we see is increasingly large businesses have been moving to divest assets in Southeast Asia and head out of the region as they tend to as they're doubling down on shale resources in North America. And this in turn creates a huge amount of opportunities for a business such as ours. We've already seen people like OMV exiting recently its gas business in Malaysia. Repsol has been announcing that it's going to be exiting its Southeast Asian operations, largely in Indonesia. And we think this trend is set to continue. And against that backdrop, we see very limited competition, especially from sort of peers and listed peers in the space, versus what we were encountering in the North Sea, which is an incredibly crowded space, both with private equity, public companies of varying sizes. And so really, we think that the setup is excellent for us to come in and make a real difference and be able to access opportunities that have not really been available to the business here in Northwest Europe. So together with the macro backdrop, this is a great setup for a business such as ours. Zooming in a little bit more on Malaysia, this is in many ways a culmination of something that I and been wanting to do for a very long time. I guess even predating Longboat, and James and I immediately after the sale of Salamander looked to build a business in Malaysia. We love Malaysia; it's a great place to be, and the block that we've picked up is particularly exciting. In an exciting space at a time when exploration is getting a lot more attention after a couple of down years. The map here shows our 2A block here in Sarawak in eastern Malaysia. This is a very old gas province with one of the world's largest LNG plants there, Bintulu. With over 30 million tons per annum, which is about a T&a-half a year of production capacity. We see majors re-entering the region and really sort of pushing for the gas to LNG opportunities. We already mentioned Total and a sort of a $1.4 billion acquisition of two sides, both the OMV stake and the Sapura stake in Sapura OMV. as well as seeing Shell, who's recently FID'd a very large field, should be doing about 800 million scuffs a day in the next year or so. We've seen a huge amount of discovered resource in Malaysia, great success rates with lots of exploration wells, focused a lot of it on Sarawak. And we also see the government encouraging the picking up of fallow discoveries through the MBR plus licensing rounds, which we'll come on to sort of shortly. So I think we are sort of surrounded by majors in a place where we can really make a difference. Maybe James?
Yeah, thank you very much. Let's zoom in on Block 2A, which is very much, the star of the show at the moment for Longboat. And so we're looking at the same map effectively on the right-hand side there. This is what you've got there at the bottom half of the end of the map is the coast of Sarawak in East Malaysia, and that's the offshore. So all those red and green blobs are gas and oil fields. And you can see the location of the Bintulu LNG plant there. You can see where our Block 2A sits somewhat outboard of most of those fields. So we're going into what we call the Northern Luconia Basin, and it's about 100 kilometers plus from infrastructure. So it's pushing out there. But actually what attracted us to this was two things. First of all, we recognize there is a huge structure out here, which I don't think the industry at large had really focused on. And secondly, it's out of the CO2 zone. I'm going to come back to that in 1 second. But when we got this block, it's 12,000 square kilometers, so it's huge in terms of relative to other exploration blocks you might see around the world. Water depths, as I say, go out to 1,400 meters, so it gets into deepish water at some points, and it's a 5-year PSC, 3 years to do our work, and then a break of 2 years to get the well drilled in. And it was really this Kertang feature which we liked, and what was notable was that we had high quality 3D over the Kertang structure itself. That was already there, shot in 2015. We've got about 6,500 square kilometers of 3D data that came with this, which we didn't pay for. That was part of the data package, and around 17,000 line kilometers of 2D seismic. So there's a huge amount of data that came with the block, effectively free of charge. When we started mapping this in detail, obviously Kertang was the thing that piqued the interest, but we've really noted two prospective trends within 2A itself. On this map, we're highlighting the Kertang structure there in orange. You can see the big orange blob. And surrounding that, we've got Kertang lookalikes. So there are other closures, four-way dip close structures that kind of have similar characteristics to Kertang. They're probably the same play, maybe different cycles, and I'll come on to that in a second. Obviously of smaller structural size, so the resource potential is going to be less. But nonetheless, there's quite a few of them. There's a second play present on the block, which has really only come about or been notable quite recently, and that's this shallower turbidite play. And I'll show you this on a seismic line in a second. And what's really piqued our interest is these discoveries south of the block, and we highlight them at the bottom end of this map. Machin Chang and Sing Sing are two notable discoveries made by Petronas Carigali recently. When we quote these success rates in Malaysia, where we see 19 discoveries, a lot of these were made here. So these two discoveries, and there's been another one as well, were part of that. And not that much is disclosed about them, but what we do note is they are turbidite plays. They're in cycle 7, 8, and we can follow them into Block 2A, and we can map similar lookalikes, analogs, if you like, within 2A itself. So we would expect that play to be present, and I'll show you what it looks like in 1 second. Here is the structure itself, the prize, if you like. We've just published this morning the results of the CPR that ERCE have done for us that give it a combined 9 TCF and 146 million barrels of liquids in the mean case. So this is the best estimate, if you like, of the volumes. I think if you look at the upside, the P10s, you're going over 20 TCF. So this is a very, very big structure. It's over 220 square kilometers in terms of closure. So we think it's probably the largest undrilled structure in the Malaysian offshore at the moment. And we've been spending quite a lot of time doing work on it, looking at what's inside that closure. What is it we'd be drilling? And where would you drill it? Because it's such a large aerial closure that it's not obvious where you would punch a hole down. Other notable things about it is it's got a gas chimney sitting above it, a gas cloud. That's encouraging in some ways. It shows you the system is working, that clearly gas is being generated here and is coming out of the structure, which you might interpret as being a negative thing. But as we'll see in a second, gas chimneys are quite common in these kind of closures in offshore Malaysia, so we don't view that as a negative at all. But gas in the shallow does kind of get in the way of imaging the structure beneath the gas cloud. So you don't really want to be drilling blind into the prospect. You want to see what you've drilled. And so finding a location that's going to test all your target intervals is a bit of a challenge. And also, what is the reservoir that we would expect to find within Kertang? And here you'll notice, if you look at the work that ERC have published, they define these target horizons by cycles. And cycles are really stratigraphically defined units that you can map across wide areas of the basin. So if you look in well data and seismic data, you can take a cycle across a wide distance, and these events are synchronous, so that they happen in one instant. And so they help us define what the reservoir rocks, or what sort of rocks we might be looking at. And when we look at the offset wells, we can take what we call cycle 1 from those offset wells into Kertang itself. So a large chunk of what we expect to find here is cycle 1. The good news about that is cycle 1 is the best reservoir. So if you're looking for good net to gross, good porosities, it's a clastic play. It's got interbedded coals within it, which are actually also the source rock for the gas. Cycle 1 is what you want. So we see in areas of this structure which have quite well-developed cycle 1 section. Also some cycle 2. Cycle 2 has a poorer reservoir. When those reservoirs are deposited, the water was getting a bit deeper, it's a bit muddier, so it doesn't make such a good high-quality reservoir unit. But nonetheless, we see that's present in there. And then shallower, above the prospect itself, we find these other cycles. We call them 7 and 8, and they are these brights that sit over the structure. And we've labeled them on this, a little bit of seismic there. What's going on there is the gas is coming out of the structure, illuminating those shallow sands, and they are brightening up. And it's those shallow sands that make up the discoveries to the south of the block. That's the play that Petronas have found. I think what's also good on here, our technical whiz in KL has put on this little seismic line, the Petronas Twin Towers, to give you an idea of the height of the structure. And so you can see they're about 470 meters or something. But you can see, the scale of the relief that we're looking at on this structure. There's something like 1.4 kilometers of height, vertical height, in terms of the closure. So this is a giant structure in anyone's book. Just comparing it quickly to some of the other discoveries in Sarawak. And, if you look at this slide here, where we're comparing it to Marjoram, this is the Shell field that Nick was talking about a little bit earlier. They're developing Marjoram and Rosemary. And here again, you can see there's a gas cloud sitting above Marjoram. There's a couple of TCF that Shell are doing there. The big headline projects are the two on the right, Langlabar and Kasawari. Langlabar is PTT operated. The Thais have worked this up. Very much a lookalike structure, as is Kasawari. Kasawari is 6 TCF, Langlabar is about 5 TCF. Kertang, as we see it here in the middle, 9 TCF, as you mentioned before. So, it definitely has analogues in terms of its structural style in the rest of the basin. But one thing you may, if you look up cassowary or LONGBOAT, if you Google them, one thing you'll hear is that they've got issues around contaminants, and CO2 in particular is a big problem with LONGBOAT and cassowary to a degree. In fact, they're having to build carbon capture projects to go alongside these developments. So CO2 in parts of this basin is an issue, and of course, when we looked at this block 2A, we were very alert to that. We were very alive to the fact that is this a CO2 risk, despite the fact that we see big structure and evidence of gas there. And two bits of evidence that really gave us great comfort. One was that when we talked to Petronas about this structure, this prospect, this is before the license round when we were doing some technical work on it. They were actually conducting a survey around here, sampling the seafloor sediments. And the analysis of the seafloor sediments over Kurtang and elsewhere in this part of the basin was that there wasn't any CO2. Or there was very, very limited evidence of CO2, but it's very, very high concentrations of methane. And that's what we found over Kurtang. It was methane rich. And the second thing that gave us a lot of confidence was what I want to show on this next map here, the regional CO2 occurrence map. And this shows you the deep, where people are predicting CO2 to be a problem out here off the coast of Sarawak. And you can see there's a huge issue to the southwest of 2A. And this is when you get into the tuna trough. So the basin gets very, very deep. And what's going on here is where people think CO2 is being generated is in these very, very deep bits of the basin where there's fractures going into the mantle of the Earth's crust that's releasing gases. And it's migrating out of those very deep parts into the surrounding areas. And so that is giving you a very strong CO2 risk and a big contaminant danger, if you like. And in fact, it's this part of the basin, just over in Indonesian waters, where the Natuna D Alpha field sits, which is a supergiant. There's over 200 TCF in place, and it's 70% CO2. It's never been developed, but it's long been recognized as this absolutely enormous field. Exxon had it for a long time. I think the Indonesians are sitting on it right now, wondering what to do with it. But that shows you the sort of volumes of CO2 you can find. 2A sits well out of it, and not only our own geochemical analysis, but also the gas found in those shallow discoveries to the south of us is sweet. There is no evidence of any contaminants or CO2 in those in Sinsing or Machinchang. So, this gives us a lot of comfort that actually we're out of the CO2 zone. The geochem's telling you it's methane. The seismic's telling you there's definitely a charge going on and gas has got in here, and the structural mapping is telling you it's a giant. So our work's really been focused on, where would we drill this prospect? Where can we catch all these target intervals? Stay away from the gas cloud, drill it safely, make sure we can see all the calibrate the resource that we can find, because when like they say, when you come for the king, you only get one shot. So you better make sure it works, and that's what we've been focused on. Switching gears a little bit, just away from 2A, looking at the DROs, we announced that we have been notified of an award for what's called a discovered resource opportunity. This is a shallow water, so it's a very different beast to what we've just been talking about. These are shallow water fields. Petronas are really wanting to license their offshore in totality. They would love to see the maps of offshore Malaysia fully coloured in by license holders getting after all of it. They recognise a lot of discoveries they sit on are far too small for the incumbent players within Malaysia. And so they're trying to encourage those companies that are qualified to do this work, of which LONGBOAT is one of very few, to apply for these discovered resource opportunities. And that basically means that you pick up discovered fields. Some of them may have been on stream already, but they all have seismic, they all have well data. You can have all the data that goes with them. They will give these fields to you if you're awarded them. You don't have to acquire them. They come effectively free of charge, but you have to bid a work program. And what they want you to do is to work up a development scheme. They're all generally in shallow water, close to infrastructure. So these are ways that they'll make sure you can tie in locally to infrastructure nearby. But they would like to see people try and exploit these things and do something with them rather than see them sit fallow doing nothing. So we're quite excited by that. You get sweeter economic terms as a result, and you get a streamlined way of doing things. So your procurement systems can be, simpler than they would normally expect. Approvals are much easier to come by. They try and encourage you to do it, cheap and cheerfully, but please, can you, do something with this resource, and we can all make some money from it. So we're really pleased about that. We can't say too much more about it right now, but we'd expect to be able to talk about this in the very near future. And I think it's a great way for Longboat to add resources, low cost. When we come to look at the development of these things, they are cheap and cheap. Like a lot of Southeast Asia, this is quite a benign environment. It's a low cost environment. It's very, very different to what we're seeing in the North Sea. And that's the way the host government likes it. And that's what they're trying to encourage. So what I'd say about this is, stand by. We will be talking a lot about this, probably from the midsummer onwards. Nick.
Thank you. So look, just to summarize, first of all, we're really, really excited. We've got a real fantastic opportunity ahead of us, not only with 2A, not only with these DROs, but also other opportunities we're seeing to grow the business and put it in a direction which and access to opportunities we have not had for a long time. And we've got the right team, we've got the right attitude. We've got our eye on costs, because that is also very, very important. And we're continuing to make sure that we're doing and delivering everything at the lowest cost possible. We'll be moving 2A forward. The farm out will be, in course and looking to deliver that so that we can focus now then on drilling. It's a super giant. And we are really, really excited and very lucky to have captured that opportunity in a hot spot at a time when exploration is getting very, very hot again in a great location. The MBR Plus, well, as James said, we'll be talking about soon. Very, very excited about that. Really sort of the next leg to the story, and the sort of pipeline of BD opportunities will be our next focus, really with an opportunistic approach so that we can remain flexible as to how we create value across Southeast Asia going forward. And with that, I think we'll take a few questions.
Fantastic. Thank you very much, in both Nick, James, for updating investors today. As you can see, we've had a number of questions that have come through already, and I'm sure we'll get a few more. So perhaps if I may just hand over to you and just click on that Q&A tab, and where appropriate to do so, just read out the questions. But just while the team take a few moments to review those, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. So if I may, guys, just hand over to you, just start at the top, and I'll pick up from you at the end.
Okay. All right. Excellent. So we'll just say, James, maybe shall I act as I'll read them and then you can. So I think the first, there's obviously a lot of questions around the farm out process, and I guess the first one is really around how will Longboat manage that overall process? Are we going to do it in house, or are we going to push it out, or what's the plan?
What's the plan? Well, it's a great question, and something we've given quite a lot of thought to. I think what's important here is we maintain a disciplined process. You see so many efforts to farm out blocks and manage disposals in this part of the sector fall over because companies don't run that disciplined process. So we feel we don't really need a third party to do it. We know this asset very well ourselves. We have a lot of expertise in terms of A&D in-house, not least Geraldine, who's recently joined us, is very strong in this area. And actually it's with some of her help, to be frank, that we have brought in somebody to help us from outside. So they're sitting within Longboat, but managing the process. There's somebody who wakes up every day and they're worrying about where we are with this process and making sure communication's ongoing and keeping all the companies on the straight and narrow. But we've seen a lot of interest, and I think, as we've alluded to several times, I'm pleased to say Petronas are right behind us. They're approving a long list of companies to review this, that they would welcome as partners within the 2A consortium. So it's looking very encouraging, and we've got some good people who are managing that on behalf of Longboat within the company. I hope that answers that.
Yes. I think there are, in terms of, so I think there's a question around sort of preemption rights, and
So maybe just on those two. So there's a question about preemption rights. I mean, there is, but Petronas, who are our big partner, are obviously approving this process and are right behind us in terms of finding. They're also quite keen on outside investors coming in. So for Petronas, I think they would love to have a new party coming in, or another player. It's a big feather in their cap. So if anything, they're very supportive of all these efforts. In terms of the first well drill, Petronas are putting together a drilling program that will go through 2025 into 2026 that will drill a lot of deep water wells around this area. And they want to see Kertang drilled within that program. We don't know whereabouts in the program it will be, but they'll have a rig come in and we will be in that train. And the farminee will participate in that as well. Obviously, we're very happy to give up operatorship to a farminee, because we are 3 men and a dog, it warrants more than that to drill a big well like this. So, but they will join that program, and it's going to happen. So that train is kind of left the station almost, and it'll be on its way.
I guess there's sort of questions around sort of the financial piece. I guess we've said in these, both in our releases and in the presentation today, that we've got enough cash to get us through the end of the first quarter next year. And really, we feel that gives us enough time to achieve a farm out. And it's our hope that the farm out will, given the high quality of the prospect and the location and the competitive nature, we're hoping that will bring in a combination of carry and potentially even some cash. So I think that we are, the good news is we are good for the time being in terms of cash, and allow us to see through that process.
Fiscal terms
is good.
Good. Yeah, I think I would add that Malaysians are, as I mentioned earlier, they're quite forward thinking as an NOC and as a regulator, and they're trying to encourage as much activity as they can. I think I'm putting words in their mouth here, but I think they recognize that particularly oil and gas to a certain extent, they work in cycles, and there may not be that many more cycles left for oil in particular, but they do seem in a big hurry to get their licenses out and people drilling things. And as I mentioned, one of their targets is to get the entirety of their offshore acreage licensed. So to that end, they are encouraging people with improved license terms, particularly for deep water and also for these small fields. You get small field allowances. There are small field terms which are quite a bit sweeter than the terms we're used to seeing in Malaysia. So the terms are attractive. The difficulty is not the terms. The difficulty for most of the industry is getting in. They're very sniffy about who they let in. And you've got to get in. Once you're in, you're away. But getting in the door is quite difficult. And one of the reasons why there's so few players in Malaysia, small players, is because they just won't let them in. You have to qualify, and you have to have the right track record, and you have to have the right ESG metrics, and that's something we've got, and it's a real competitive edge.
And that really is sort of, one of the key things we took across from our Norwegian operations, and really were able to leverage that and the wells that we had drilled and our safety record and our technical staff, and really utilize it to get into Malaysia back about a year ago. So that's sort of that's been a real positive. There are a few questions around the DROs. I think we're going to try and avoid a lot of that for now. We'll make more comment when we can about that stuff. I think there is sort of one question that is sort of interesting, which is sort of like it really rolls around. Are these too small for incumbents? And the reality is no. They're, a lot of them are not small at all. They've been clustering these things together as well to make the sort of the overall development bigger. I think that it really will. They're of a size, I think, that are not interesting for majors, and we see there's still quite a few majors, but they are of interest for the sort of smaller and medium-sized companies, and for us this would be perfect. The resource actually is quite reasonable, and when we can talk more about it, you'll be able to see the scale of some of these. So we're really excited, and it's definitely material for someone like us, and even for sort of bigger companies than us. We won't comment on any of the sort of farm out discussions and what have you. I'm sure that everyone's going to be very, very interested in that. This is one of these things where you're going to have to trust in us to run the process. We've got a lot of interest. We've got a lot of experience, across the board in terms of managing processes, acquisitions and divestments. Both myself, James, and a number of the people, Geraldine, a number of people on the team. We won't be able to provide any information on that, but trust us, it's going to be an interesting process. Question about the chance of success in the CPR.
Yeah. That's a good question. So you've seen, we're showing, or ERC have published chances of success, some of these intervals. It really, this is exploration. First and foremost, Nick absolutely hates me saying this, but I am a super reluctant explorer. Despite being the explorer around the table, I'm really. I wouldn't say I don't like it. I'm a nervous explorer in many ways. But so this is exploration. In terms of chances of success, this is telling you that these are kind of mid to good. The risks look pretty reasonable for exploration drilling, particularly of a target of that size. What you normally find is the bigger the prize, the higher the risk. So you can drill little step out prospects next to your field that might have a 60-70% chance of coming in because, we know everything works. It's just the next bump here. What's unusual here is we've got sort of moderate to quite good risk against a giant prize. So that is highly unusual. The key risk really is seal. So what we've seen in looking at offset wells is some of them look to have failed because of seal risk. And we're quite away from the nearest well data, and we can use seismic to a certain extent to give us some comfort. And it certainly looks like the drape. There's a big unconformity. Why that looks so stark? The seismic line is because it's an unconformity that forms that surface that looks so obvious on the seismic, that forms the kind of the witch's hat, if you like. And we're reasonably certain it's a very shale rich sediment that drapes over the top of all that. So that forms a good seal. But within the cycle one itself, it's quite a sandy unit, which is great from a reservoir point of view, but could be a bit tricky from a seal point of view if you're looking for intraformational seals. But we would expect to find seal. We're looking for seals within the unit, and also ultimately to have a shale unit draped over the top of the whole thing. So seal is your biggest risk. Outside of that, the rest of it, the plays demonstrated the shallower units. In some ways, the play has definitely been proven by those wells to the south. The charge is there. That's clear. So most of the risks are kind of accommodated for, apart from the seals, the one big outstanding one. So I would look at it risk versus size of the prize. That's what's anomalous.
Again, I think we've answered a lot of these ones around funding that we've given an answer there. Okay. So I don't think we need to do that. Would you consider buying producing assets?
Well, I think so about that is we would love. I think our ambition is to be a full cycle E&P company. We would love to build a business in Southeast Asia that has all those elements. I think what's challenging right now for all these little companies is access to capital, and we are no different. So I think the days of we found a great deal to buy some production, can I go and get some money from the market, are kind of not here. They're gone. I'm not sure they're going to come back. So I think to do that, we're going to have to find a different way, whether that's utilizing one of the assets we have in some way to create an option which enables that to happen, or doing something with a capital provider where, you know, perhaps they're looking for offtake options or something else around the transaction. But I think we're going to have to get a little bit cuter than perhaps we used to have to worry about. So we would love to, but I think how you go about that is we're quite limited, but, you know, we're imaginative people, so hopefully we'll find a way.
Yeah, and that's really the sort of the messaging around being opportunistic. Again, we have a long history of transacting at multiple businesses, you know, in multiple situations. So, you know, I'm confident that we'll be able to build the portfolio in a real value accretive way. And so, you know, that's going to be super important to us. Again, lots more questions around just sort of equity issues and stuff. And I think we've answered our sort of positions on that. You know, we've been talking about the farming down. Yeah, there's lots of just there's. Are there any future licensing around exploration in DROs in Malaysia or nearby?
Well, there is. I mean, they're keen to license more acreage. I think what we're very conscious of, and coming back to my comments about, you know, my views on exploration generally, I think small companies that go on an exploration run, at one end of the spectrum, exploration is just a big liability. And what we don't want to do is end up with a large portfolio of liabilities. That's absolutely not what we're about. So we have to be very disciplined and very selective. If we pick up some exploration, we have to be really confident that we can bring in a partner and flip this round, because we don't want to drill it with our money. That's absolutely, you know, that's not us. So we're very alert to that, and we're thinking about lots of exploration, you know, potential, but you've got to be sort of one step ahead of the pack to do this. And I would say we got lucky with 2A. I mean, that was luck mainly. We just happened to be in the right place, right time, and it kind of fell in our lap. And that's okay. You know, if you're lucky, just, you know, fess up, admit it, and make use of it. So we want to do something with that. And thank you for the good fortune. But you know, can we get lucky again? I don't know. We'll see if we can make our luck, but we're definitely alive to those things.
Yeah, and so we're keeping an eye across the region. You know, obviously we're starting Malaysia, but there are, you know, other countries that we would consider going to as well. But we'll do it in a measured and thoughtful way. So look, we're really excited. I think we've answered most of the questions. I think we've probably gone on just about long enough. So I would suggest we bring it all to a close now. I think the intention will be to ensure that we do these regularly, especially when there are big pieces of information that come out. We want to be able to connect and communicate with our investors. We think it's important. And so, you know, thank you. Thank you for attending today. Thank you for taking the time. And we look forward to the coming weeks and months. Trying to, you know, rebuild Longboat and make it a really exciting Southeast Asian business.
Fantastic. Nick, James, thanks indeed for updating investors today. Can I please ask attendees not to close the session, as you now be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Longboat Energy PLC, I would like to thank you for attending today's presentation, and good afternoon to you all.